Hey everyone, welcome back to Corporate Decoder, the place where we will dive deep into the financial jungle and try to make sense of what companies are hiding in their filings. Today we are looking at Movano Inc. and their recent 8K filing. Prepare for a reverse split surprise before we start. If you appreciate getting straight insights from corporate documents, make sure you are subscribed and join our Discord community linked in the description below. So what is this Form 8K all about? Well, think of it as a company's public diary where they report any significant events that happen outside of their regular financial reports. Today, we are looking at Movano Incorporated's filing from the 19th of December 2025. Movano Incorporated, the company we are dissecting today, is a company that was incorporated in Delaware. They seem to be in the business of technology, but what's really interesting in this report is a significant change they made to their stock. Movano had a reverse stock split of their common stock. Now, what exactly is a reverse stock split? Imagine you have $10 bills, and someone says we are going to swap those $10 bills for one $50 bill. You still have the same value, but now you have fewer bills. That is essentially what a reverse stock split does. It reduces the number of outstanding shares of a company. In Movano's case, they did a 1-for-10 reverse stock split. This means for every 10 shares of their common stock you owned before, you now own just one share. This sounds like a big deal, but the total value of your holdings should remain the same. The company likely did this to increase the price of their stock, perhaps to meet listing requirements for a stock exchange or to make their stock appear more attractive to investors. They saw their stock price drop too low, and this is a way to artificially boost it. This report also mentions that they are republishing some financial information to show the impact of this reverse split. They are incorporating their audited financial statements for the years 2024 and 2023. Unfortunately, the detailed financial tables themselves are presented as an exhibit, which means we can't directly analyze them here in this scrolling format. But the key takeaway is that the company wants to make sure investors see the updated share count. One interesting point is that Movano Incorporated identifies itself as an emerging growth company. This means they are a relatively new company that can benefit from certain regulatory leniencies. However, they have elected not to use the extended transition period for complying with new or revised financial accounting standards. This suggests they are aiming for a higher level of financial reporting transparency sooner rather than later, which can be a good sign for investors looking for robust data. Even though we cannot see the full tables in this view, the fact that they are presenting audited financial statements for 2023 and 2024 tells us what we should be looking for if we were to access Exhibit 99.1. We would want to examine their revenue growth, profitability, and any changes in their cash flow. Since they just performed a reverse split, a crucial number to look at would be their earnings per S-share or EPs. After a reverse split, the EPs should theoretically increase because there are fewer shares to divide the total earnings by. So if their profits stayed the same but their share count dropped by 10 times their earnings, per share should appear 10 times higher. This is often done to make a company's financial performance look stronger on a per share basis. Alright, let's look at the big picture for Movano Incorporated. The reverse stock split is a clear signal that the company has likely been struggling with a low stock price. While this can be a necessary step to maintain a stock exchange listing or attract investor interest, it does not fundamentally change the company's business or its underlying value. It's more of a cosmetic change to the stock itself. The fact that they are highlighting their financial statements from 2023 and 2024 suggests they want investors to focus on the company's operational performance, rather than just the stock price. A key question for investors is why the stock price fell so low in the first place. Was it due to poor financial results, a challenging market, or specific company issues? Without seeing the actual financial tables for 2023 and 2024, it is hard to give a definitive answer, but the reverse split itself indicates some level of distress or a desire for a fresh start from a stock valuation perspective. My take on this filing is that it is primarily an announcement about a structural change to the company's stock, accompanied by a promise to show updated financial figures. The real story will be in those financial statements. If those statements show improved revenues, controlled expenses, and a path to profitability, then the reverse split might be part of a larger turnaround strategy. However, if the financials remain weak, then this reverse split will have been just a temporary fix. The biggest risk here is that a reverse split alone does not solve underlying business problems. Investors should be wary and look closely at the actual financial health of Movano Incorporated before making any investment decisions. That is our breakdown of Movano Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.